Decided to make another early morning video before I head off to work. When you're first starting in the real estate investing thing, if you don't have anything, if you don't own anything, all you got is your job. You need to get your money right quickly. So let's say you're still staying at home with mom and dad or whatever. That works out great. You can chunk back money, but blah blah blah. Let's say you only have about $100 a month that you can save. It ain't a lot of money. Let's say you can put back $100 a month and you get, I don't know, maybe $1,000 income tax check back in the spring. So now you're up to $2,200 for a year. So in 2 years you can have $4,400. And like I said, you've never bought a house before, which also works out great. You can get a FHA loan, and this only requires you to put like 3 or 3.5% down. Some lenders can get you, down to the 3% mark. So if you can find a property for say $50,000, and they do go for $50,000. And like I say, I just bought a really nice house for $42,500. But if you find one for $50,000 even, and all you have to do is put back 3%. I think it's I don't have my calculator on me, but it ain't much. $4,400 will get you in the door on that one. The only problem is you do have to live there for a set amount of time. I can't remember exactly what the years are. It's not very many. Somewhere between 2 and 7, either 2 or 7, I think. But you got in for 3%. You live there for a couple years. While you're living there, you're getting the thing up to rental grade. Then, what a shame. I got to do something different. So you move on to your next situation. While you're there, you're doing your little rental upgrades. You might be saving up a down payment for your next house, something a little bit nicer, and not a lot nicer. Don't spend your whole wad on your nice house, on your dream home, because you're going to move up slowly. So you move out of that one, get your next one. You're renting the other one out, and that's making a payment on that one. It's making you $200 or $300 a month, and for cash flow. So with your next one, you're going to need a bigger down payment. But I mean, at this point, you've built your credit up. And you're starting to get extra income because, once you get the new one, you'll have that. Plus, you've worked your way up in your career a little bit. That you can just move from property to property to property. I mean, like physically move, move yourself. I'm living here, and I'll move to the next one, and I'll move to the next one, and you can do your upgrades like that. I don't do that. I messed up. I bought what was my dream home at the time when I bought the house I'm living in now, and the payments were ridiculous. I mean, they ate me alive. But now that I've gotten a few things paid off, and I've advanced in my career, and I already had the one rental. We really threw everything we had at that one rental trying to pay it off, and it's paid off now. So I mean, we got the cash flow from that, and that works out great. But then, if I'd have done it differently, if I'd say I only had a little bit of money I could have put back and saved, if I'd have saved it, then I'd have several rentals, but I wouldn't have any paid off, which would have been better. It would have been more beneficial, because the more rentals you have, the more cash flow you have, to where you can buy more and more and more and more and more, and then, move your income forward. But yeah, get into that first house as quickly as possible. Hopefully the value of it will appreciate while you're in there and give you something you can use for collateral. And that's about all I have to say. It's the only thing I have on the top of my head today. I think you can do it. I believe in everybody. Please like and subscribe and share and all that good stuff. And I will be talking to y'all soon.